It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, September 16th, 2015. Ooh, baby, the week of range rotation, very profitable range rotation if you followed our newsletter this week. The week of range rotation continues ahead of tomorrow's incredibly big FOMC announcement. Remember, tomorrow we're supposed to be hearing, depends on who you ask, if they're going to be raising or keeping rates the same. This is probably the most anticipated news event of the year, right? Of the year coming up tomorrow at 2 p.m. Eastern Time. Crude's bullish as the rotation back to the range highs continues. We knew crude was going to go higher this week. I honestly didn't expect it to go straight up as fast as it did. I'll take it. S&P completed its rotation back to the range highs. So now we look for buyers to try twice and fail at these highs. I got a pretty good chart for you guys to look at on the S&P here tonight. Gold, how about that gold market? Boy, oh boy, did we nail that rotation. Gold is bullish, but way overbought at range expansions. And the big picture, we'll take a look at that big picture, tells us to be looking for the short selling opportunities tomorrow ahead of FOMC, of course. And of course, the euro, the little market that could, it continues to give us opportunities. We're bullish on the euro trying to complete its rotation back to the highs. Rotation, rotation, rotation. We've talked about that, it seems like, for the past few months here right now. Boy, oh boy, this has been an incredible week. Before we jump into our charts for tomorrow, and I have a very important newsletter for you guys, I do want to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube page, there's a link right in the description of the video to take you over here to our trading blog. First of all, on our blog, upper left-hand corner, if you're not a member here at School of Trade and you'd like to test drive our live trade room as a guest, you can grab a free pass in the upper left-hand corner. I have a nightly newsletter mailing list. That way you never have to worry about missing another newsletter ever again. All I need is your name and your email address, and then make sure you double check your inbox. I'm going to send you a verification email, and that way I'll send you an email every evening when that newsletter is ready. You can also download all the charts in tonight's video right below the video. There's a link right there. And then over on the right-hand side, you can register as a trial member here at School of Trade. I take a lot of pride in the fact that you're going to learn more with me on 1 week trial with me than you will anywhere else on the paid membership sites out there. And of course, you can learn more about being a member. You can read real member reviews. And, you know, we always have someone standing by 24/7, 365 to give you guys a hand. Now you know why you should be watching this on the trading blog. Let's talk about this strategy for tomorrow. Now, again, tomorrow we do have all hands on deck. Tomorrow is what you call early in, early out. Tomorrow we are looking for the best tradable opportunities until about 11 a.m. tomorrow morning. And then things are going to get a little bit weird out there in these markets. Usually, historically speaking, price will usually flutter higher ahead of the FOMC meeting announcement. Guys, I'll tell you the same thing I tell all of my clients here at School of Trade. If you've never seen an FOMC announcement before, do not even think about trading after 11 a.m. tomorrow. In my opinion, you've really got to see about 6 of these suckers before you really get the idea of what it feels like to see such tremendous volatility, and here's the kicker, illiquidity. Now, guys, pay attention. I know the market's going to move a lot over FOMC, but it's very dangerous because there's no liquidity. Okay, if you need more information on that, email me, and I'll tell you why it is extremely dangerous and why you can't rely on your stop losses to protect you during tomorrow's FOMC report. All right, not enough liquidity. Remember, your stop is not a safety net when it comes to those big news events. It's going to tear right through that stop, and then you don't want to take big chunks out of your account tomorrow. All right, so 11 o'clock. Promise me, if you're going to trade after 11 o'clock, do it on a simulator, right? Or do it in someone else's account. I'm kidding with you. Be careful tomorrow. Now, we're going to go through big pictures here and then go down to the smaller pictures because I want you guys to see what's really going on right now. We got a lot of important stuff to talk about. I got to move a little bit quickly here or else we're going to be here till the cows. We'll be here till the FOMC report. Let's keep going. Jumping into crude this morning. As you guys know, we talked about this on crude. We were rattling around inside of this range earlier this week, right? And that was why we were looking to buy at the beginning of the week. So here we are now. We've rotated all the way up above the 46.38, right? Kind of a quarter of that range. And now those buyers, they're going to have two shots to get to that 48.87. Okay, so here's what you're looking for. You got one try. You're going to see a second try. If they can't get to 48.87, what's going to happen is it's going to go hunting for that 43.88. Now, I don't trade this chart. This is way too slow for a day trader, right? It's almost too slow for a swing trader, to be honest with you. But it gives you a very easy, bigger picture. So, buyers have tried once. They're going to get a second shot here. If we don't get to that 48.87, they're going to run this thing back to 43.88. So that's the big picture, what it's telling us right now. So right now, these buyers have one more shot to get it back up, right? Take a look back here. You can see one try, two tries, one try, two tries down, one try, two tries back up. So we know where the levels are of resistance, 48.87. And we know where the levels are of support, 46.38, 43.88, if this thing does get a little bit weird tomorrow. Now that you know the big picture on crude, let's now go down to the smaller picture. Here's that 48.87, right? Follow the bouncing ball. Okay, here's that 48.87. There's that it's 43.88 down here, right? We'll call it 43.87, right? So there's that big range that we were talking about, and then there's that 50% right in the middle. Now, if you remember, bullish off the lows here earlier this week, breaking it down, and we talked about this yesterday, A, B, C, D. So we are almost now up to that measured move. Okay, so we're almost to that measured move, and you can see we're going off sideways here. So this is your first try. Your second try is going to come here, and they're going to need to run this thing up to that 48.87, or else it's going to really get almost like it's tied to a string. They're going to try to pull this thing right back down in, right? So remember, go back to the larger picture. And now you can see where we are here right now, right? There's that 48.87. That's where we have that second push higher. If they can't get it, it's going to get sucked right back down to where we came from. So as we go forward here, looking at this chart now that you kind of know where we are in the bigger picture, and now you've got it on the smaller picture. There's a lot on this chart. I realize that, and I hate to put so much in the chart, but this is, unfortunately, it's all relevant. So look at the notes upper left-hand corner. Crude oil is bullish as the buyers continue to rotate this market back towards the high of this $5 range, up around $49 a barrel, right? To be specific, it's 48.87, okay? Today's big push higher ended with a trading range. So we're going to be planning on using that trading range along with some measured moves as our areas of interest tomorrow. Now, everything that we talk about here, everything that we talk about right now on crude oil, you need to remember that if we get and can't stay above, if we can't stay above 46.37, right? If we can't stay above 46.37, this market is going to get, just when I try to get out, they pull me back in. It's going to try to get pulled back down in. We got FOMC tomorrow. Really, you got to be aware anything can happen. But your line in the sand is going to be that 46.37 tomorrow. Okay, it's a very, very important level. Above it, we're trying to run to those range highs. Below it, well, may not get all the way down there tomorrow. You know, it took 3 days to get up here, right? So it may not be till Friday when we end back at 44. But once we get below 46.37, that's going to be your line in the sand. Ultimately, you are bearish down below that level, right? So you really could put it right there. Okay? Now, with that said, what was level again? 46.37. Now, big push up today into a trading range. Okay, this is a very easy to see trading range. Now that trading range has a bullish bias to it. So naturally we're looking for traps and we're looking for pullbacks, right? I actually teach that in our free trial. Okay, so traps and pullback. What you really want to be looking for is for that trap. That trap's going to be a beauty because it may give you a shot to buy right around that 46.37. Okay, do not take this too literally. If we just dip our toe in the water below 37, that's not what I'm talking about. I'm talking about we can't stay above it. See ya, it's going right back down. Okay, so bullish bias to this trading range. That means look for that trap and be a buyer. Right now, we're a bull as long as we're above 46.37. That's pretty much the bottom line. Then, of course, we break out, pull back. There's your breakout, pull back, coming down, going up to the 40.87. Okay, so that's the trading range. Looking for traps and looking for pullbacks above it. Keep an eye, though. Here's the challenge. This is what I honestly see being probably the biggest challenge going into tomorrow. We have a lot of measured moves that we really can't tell which ones are going to be more important than others right now. Okay, first of all, the big one, A, B, C, D. This is the one that scares me a little bit just because we haven't got there yet, 47.32, right? 47.42. So pay close attention to that tomorrow. I'd rather see us test it and then break it than try to break through it when I'm looking to buy. I don't want to buy into it, let's put it that way. Okay, so you got to respect that 47.42. The real tasty measured move is the one that we see here most recently, right? A, B, C, D, right? That's a nice little tasty measured move right there. And that puts us up around 48, 46, right? We're getting those warm fuzzies now about getting back to those highs of that range. Okay, that'll be a great target for you breakout pullbackers, right? Using that range. Then we have another potential measured move here, and that is the breakout, the pullback, and then the continuation. I don't have enough to know that yet, but that definitely has potential to put us back up to that high. All I know is this for tomorrow. Okay, what I do know is this. I know that my line in the sand is 46.37. Below it, I'm bearish. And above it, I'm bullish. I also know that we have a bullish bias into this trading range, which means I'm looking for traps and I'm looking for breakout pullbacks. What I do not know yet, and when I don't know, I have to trade carefully into these areas until I do know, is that measured move. I don't know if that is close enough. I don't really buy into close enough, right? The markets are smarter than that. So I would expect this price to test and then break out and pull back, okay? So just don't buy into that it's just kind of lingering there, that 47.42. The ones that I really like, the measured moves I really like are these A, B, C, Ds. These will make for great targets up here, okay? Once we break free of that 47.42 measured move. And then again, if we do get the breakout pullback here, now we're talking for that shot up to 48.87. Remember, we'll have this market running in real time tomorrow morning in the trade room. And again, 11 o'clock, you got to cut it. You got to cut it tomorrow. I don't care how good you think you are. The volatility and liquidity really gets dangerous as you go into FOMC. And I'm telling you right now, I don't believe there's anybody tomorrow that's not going to be waiting on the edge of their seat to hear what they say about this announcement tomorrow. So get to it early and be careful, right? Be careful. It is one of those days that I'm telling you, tomorrow fortunes will be made and lost tomorrow around that FOMC announcement, and I hope you're on the right side of that. Now, let's go to the S&P. I got to keep moving here, or else we're going to be here till midnight. Here's the big picture on the S&P. I wanted to show you this because, yes, we knew we were bullish on the S&P. Yes, we knew we had to complete rotation. But if this gets a little bit tomorrow in the afternoon, now you know where this is going, okay? Now, line in the sand, 86.75, okay? We are expecting, this is as if there was no FOMC tomorrow. What I'm expecting is for the buyers to try, struggle, and we rotate back down. That's what should happen, okay? Range rotation, right? Keep riding the horse that got you here, right? We found that earlier on this week, and we used it all the way back up and got paid handsomely on the way back up. Now we're expecting rotation back down. That's what we're going to be looking for, and the best opportunities for this are going to be buyer failure. Get those buyers to sink their teeth into that and then sell right into sell right into those stop losses. It'll throw that price right at your first target, tighten down that stop, and hold the runner down to your targets waiting for you. Targets at 70, targets at 53, targets at 36.25, and targets at 19.5. Now, that's what should happen. We're going to be in la-la land tomorrow with FOMC coming out. And this is one of those markets that definitely has potential to really react just because it's the biggest market in the world. Maybe the bond market, the notes market, but you get the point. Biggest equity index in the world. So where do we have targets overhead, right? Again, you're not trading FOMC tomorrow. Promise me you're not going to. But if you did, right, you got measured move overhead, and then these are range expansions, right? These are range expansions, range expansion. This is easy stuff. We don't know enough about the future, but what we do know, though, is there are two significant things in this chart that tell me look being a seller right now. One, top of the big range. Two, this cute little channel, this handsome little channel here, right? So we rotate high to low, high to low, high to low, and then back to high. So that's really where those buyers want to be sinking their teeth into this thing, right around that 1953, right? And that would come after the sellers have tried once, tried twice, and fail. Probably not going to get a chance to buy the 53 tomorrow, but I'll tell you, if we do get down there, be looking for those sellers to try and fail for a buying opportunity. What I'm talking about is, those sellers are going to have two tries here to get this price all the way back down to those lows. So when they get down to there, right, 1, 2, no, right back up, and that'll give you a chance here to buy the low of that larger channel and then send this sucker higher. So again, what should happen and what a rational S&P 500 will do tomorrow is begin its rotation back down. What's the best way to trade it? Do nothing until you see buyers try twice and fail, right? Buyer failure at the high. You're not going to get a selling pattern at those highs. You'll get failed buying patterns. Okay, so now that you know the plan, the bigger picture on the S&P, I better keep moving here. Let's get back down to my faster time frame. The E-mini S&P is bullish, but we are all the way back at the highs of the range, which means wise traders are patiently waiting for buyers to fail for short-term opportunities off the highs. We can also see a bullish spike in channel, which gives us two very important areas. Look at this. This is an incredible example here. Okay, here's that big trading range. Right? There's that big trading range. Here we are at the highs, right? We talked about that. That's what we talked before. Here's that big Chanel, right? Here's that big channel. Beautiful looking channel. And here we are rotating, right? And then there's that 50 area I was talking about, right? There's that 1953. Wow, look at this. So we know that's where you want to sink your teeth into this sucker, right? That's where the buyers want to get to buy in. Okay. Now, check out the spike in channel. Ooh, big spike up, channel up. Okay, spike in channel says strength, right? Spike in channel says strength. If you watch my newsletter, you're a pro at these now. Rotation. Now, we know is that this spike in channel tells us to be a buyer. It does. It definitely tells us to be a buyer. But the range tells us you're cuckoo to be buying these highs. That big long-term channel says you've got some screws loose if you're buying these highs. So spike in channel says get to buying. Range says don't buy right now. Big channel says don't buy right now. What do you think we're going to do? We're going to keep looking for bullish opportunities. Now, where do you think we're going to get a good pullback to? If you know how to trade a spike in channel, because you trade with me every evening on the newsletter, you know it's probably going to pull back to that beginning of the channel. So that's your tasty area right there. That's your delicious tasty buying area right there. Pull back to the beginning of the channel, of that spike in channel. If we get a shot at that tomorrow, that's really where you want to go, right? So really, this is your area right there. That's your area right there. 1953 to 1960, that's your area. And what do you think is going to be the best way to make sure you get the right spot? Comes down, sellers try once, sellers try twice, can't do it, right? And you are buying right into those stop losses. I love failure patterns because they throw that price right at your first target, and we can get rid of all that risk. So patience on the buy side right now on the S&P. And again, 11 o'clock, that's your cutoff for tomorrow. Shall we keep going? I hope you said yes, because I'm going anyways. Let's keep going here. Now on the gold. He's got a big picture on gold too. Yes, of course I do. You know what you're dealing with right now. Okay, long-term channel, right? Big picture on gold. Big picture on gold. Long-term channel. No wonder this newsletter is going to be late tonight, right? Jeez Louise, did enough work to last me 2 weeks. Long-term channel on gold. I really do enjoy this job though. This is the fun part of my day. Okay, long-term channel on gold. Back to get on with it, Joe. Long-term channel on gold. Undershoot of that low. Undershoot of that low. There's your undershoot resistance right up there. Okay, so we still have some room to go here right now, but there's no doubt about the fact that we have an undershoot, and there's no doubt about that we could keep going higher here before we end up going lower. Okay, let's be very, very honest. And since the FOMC announcement tomorrow is talking about interest rates, and when you think about interest rates, you think about the dollar, and when you think about the dollar, I immediately think of gold, that funny yellow metal, and I think about the euro, which we're going to talk about in a moment, okay? So this is another one of those markets. I'll tell you, crude oil really is the one tomorrow that has the least likelihood of being affected, right, by this FOMC. Everything else is, again, is pretty much off limits after 11 o'clock tomorrow. Okay. We got the big channel and we got the undershoot. So everybody with me on gold, this thing could easily go up a little bit higher here before coming back down. Okay, now, next thing here. There's that trading range. Remember this from last night, right? We were down here last night, and I said expect that rotation, right? Buyers try once, they tried twice, couldn't get the highs, go back down once, twice, got it done, now we rotate back higher, right? That's what gave me the green light to be a buyer today on gold. Well, boy, oh boy, like everything else today, it just kept going. Okay, where did it go to? Surprise, surprise. Take that trading range, copy and paste it. Now you're up here in the range expansion and resistance. With me so far. Okay? Top of the long-term channel, up at range resistance. By the way, if you take that trading range, this is some pretty cool stuff. Projected higher once. Oh, projected higher. He didn't do that. Yes. Projected higher twice. Look at what that is. 1130. Wow. So anyways, 1130. That's looking pretty tasty as another area of resistance. You know sellers are going to be drooling over that if that's where we end up after FOMC announcement tomorrow. Wink, wink. Right? You know what I'm talking about. So stay patient tomorrow. Especially after that news comes, or especially after 11 o'clock. But this market, you've got to be thinking bearish right now. You've got to be thinking bearish, okay? Even if it goes higher, you've got to be thinking bearish because, again, we have that long-term downtrend into that trading range. We're up around major anchor resistance. We do have another level overhead. Don't get me wrong. I'm not saying it can't go higher. I'm just saying right now, you've got one try by the buyers. Can I get a second try, please? And can I get a second try failure? Absolutely, right back down in. That's what you got to be looking for tomorrow. That's where the big money's being made here. You might be able to swim upstream here up to the 1130, but you know what I always say is don't waste your bullets trying to get long here tomorrow until you see, well, what's what I'm looking for? You're in a downtrend. So I would rather save my bullets, let this thing go higher, and then look for the much straighter path to profit, bringing this thing right back down. So you got to be looking for the sell side tomorrow on the gold, at least in my opinion. Now you get the big picture on gold. Oh boy, running low on time here. And let's go down to the faster time frame now. Oh, you didn't. Yeah, absolutely. Now, here's that trading range. Here's that trading range. That's another spiking channel. That's another spiking channel right there. Here's that trading range. I'm getting all hyped up on this thing tonight. It's an exciting time of year. It's like Christmas at FOMC. Okay, there's our trading range, right? There's that range expansion. Yep. Okay, so there's our range expansion. And you can see we rotated off that low all the way to the high, and then we didn't even get a chance for the buyers to fail and sell that thing back down. That was the guidance from last night's newsletter. It just kept on going. Now here we are. Overshoot the big picture. Overshoot the bull channel by a freaking football field, right? Overshoot that channel by a large margin. That means we come down, support there, on the way back down. And then look at the volume. Look at the volume piling up down here, right? That's your target today, guys. That's your target. Now, here are some let's say 3 really big clues. 3 real important clues. Clue number 1, trading range. Goes up, back in. Number 2, volume. Big old volume spike down around this 1104, 1106 area. Bingo. Clue number 3, we have the spike and channel. Now, this is a cute little spike and channel, but don't let its small little spike there fool you guys, because what do we know about a spike and channel? We know the deep correction could come all the way back to the beginning of the channel. And that's where it is, right there, 1107. So if you're looking for some good targets, I got you covered. Down around this 1107 area. And then, honestly, you've got to be looking for buying opportunities in the short term again. Here's what I'm looking for tomorrow. I'm looking for the 1, 2 tries, failure, back down in. You've got target at the old channel, target at the range high, target at the old channel, and target back at the spike and channel. Then look for sellers to try twice and fail, because they're going to try to run this sucker down to that range low. Capiche? Absolutely. Wait for them to fail trying to finish the move off. Okay, if they do, they're going to get it all the way back down to that low. If we get all the way back down to that low, all bets are off, and we're likely going to make a run for that 1093. Okay, I can't go into everything for tomorrow. That's what my trade room's for. Come out and see me. So we're looking for buyers trying once, twice, failure, back down, target, and then looking for seller to fail around the 1107.2. Go down, sellers try once, sellers try twice, and see ya, right back up. And then we got the A, B, C, D, and we'll use that for our long-term corrections. That's a mouthful, and it's got to get done tomorrow morning before 11 o'clock. I know. You better bring some water tomorrow if you plan on doing all that before 11 o'clock. Not likely it's going to happen before 11 o'clock, but that's the scenario that I'll be looking for. I think the biggest clue right now is that volume. If this thing doesn't get pushing, it's going to come right back down in, and then they'll start looking for that next push higher here after it comes back to that 1107 area. Whew! Are we done yet, Joe? No. I got one more for you here. Let's wrap it up here with the mighty euro. The mighty euro. We knew to expect a pullback on this, right? Bullish move into that trading range. This is easy peasy, right? This is easy peasy. We got that trading range of the bullish bias. There's your trap. I talked about that last night. Remember what I said last night? Stay patient. Remember that? There was a measured move down here. You remember this, right? There was a measured move down here. It was below the low of the range. I told you to stay patient. I told you, right? So stay patient for the price to push through it. And then, of course, you got the trap going right back up in. I mean, just like a violin it got played today. Those sellers got smoked once, twice, but bam, right back up. So now buyers are trying to rotate this price right back up to the high of that range again, right? So rotation. Rotate from the low to the high, back down to the low, back up to the high. Okay, rotation. They've tried once. Here comes your second try. Right? We should be headed back up to that 1365. I've got targets at 65. I also have a target here for a short-term measured move. And then check this out. We have a more mature measured move, right? That takes us all the way. Was that my French accent right there? What the hell came out of my mouth right there? 1472. That's going to be, I am from New England originally, right? A lot of French Canadians up there. Amazing people, amazing food, right? Even if you don't pronounce your R's. 1472, that's your long-term measured move. I love you. I love you. Yes, I got tons of family there. So 1472, that's your larger measured move. A wicked measured move, if you will, all of my New Englanders. And of course, we have your 1472 up there, right? That's a long-term target. Short-term measured move. That's really where you want to get the bulk of your profit off up there, up at that 1396. So keep on buying, right? Keep on buying here on the euro. You're definitely on the right track here. And then once we get back up to that high, that's going to be the easy target. What you want to look for is you want to look for sellers to try twice to go lower. If they can't go lower, you just buy more of it, all right? If they can't take it lower after once, twice, right, trying to push this thing back down to those lows, where are they going to try to take it to? They're going to try to rotate it, right? So they're going to try to rotate at the highs. They're going to try to rotate it at the lows, okay? And then we're going to buy those lows again. So really the scenario right now is get at it now, right? Get at it now up to that high. Once we get to that high, I'm going to leave a portion on here to run to those measured moves. But if you want to re-enter, what you want to do is expect for rotation back down, right? They're going to try to rotate this thing back down. You can buy it again once it rotates back down. But if they fail after 2 tries to get the rotation, that's your cue to start buying more. All right, guys? Guys and gals, I would love to go over all of this with you guys tonight. Stay bullish here on the euro and stay focused on that range rotation. On the gold, you know what I'm looking for tomorrow. Buyer failures and then selling back down before yelling down to that 1106, 1105 area, 1107, 1105 area there on the gold. I should tell that joke more often. And then, of course, looking at crude here, we have now broken that measured move, right? We have now broken that measured move. So you can take that out of the equation now. Now you're free to go with breakout pullbacks. And again, remember, the line in the sand, 46.37 tomorrow on crude, right? I'm not talking about a dip my toe in the water. I'm talking about can't stay above it. If we can't get above it and stay above it, we're going back to 44 by the end of the week here. And again, we're looking for measured moves on the way higher here on crude. Breakout pullbacks as we go back up to that 49 area. And then, oh my goodness, they're going to shut down my YouTube account. I keep talking right now. And then again, on the S&P here, right, on the S&P, don't forget, that was the wrong chart. On the S&P, right, we've got long-term channel says don't buy right now. Trading range says don't buy right now. Spike in channel says keep looking to be a buyer and look to be a buyer after that big correction tomorrow on the E-mini. Boy, oh boy, I'm going to go take a brief siesta after that, after those shenanigans. I hope you guys had a great newsletter with me, guys, this week. This is my last one this week. We do have a trader's holiday as of tomorrow afternoon. It's quad witching. I haven't been able to talk about that yet this week because we've been so busy with these range rotations. But just so you guys remember, though, Friday is quad witching, right? That means tomorrow afternoon. It is Fed Day tomorrow. Really, after 11 o'clock tomorrow, you really got to be careful. Volume is going to be dicey tomorrow afternoon after 11 o'clock, especially around that 2 o'clock announcement tomorrow. And then Friday is a trader's holiday. Friday's a trader's holiday. If you're going to be trading Friday, just like tomorrow, get at it early. Early in, early out tomorrow and Friday. Friday could be a disaster. It could also be incredibly easy just because you're going to get that reactionary stuff to tomorrow's FOMC report. All right? So next 2 days, early in, early out. After 11 o'clock, the next 2 days, you're gambling. right? And remember, if you want to gamble, go to Vegas. They got music, they got dancing. It's a whole lot more fun to gamble in Vegas than it is with your trade account and your trading career. Last but not least, this is my last newsletter of the week. The next time you guys hear from me, right, hopefully it'll be toned down a little bit. It'll be next Monday evening at 8 p.m. Eastern Time. And as always, don't forget, grab a copy of your free trial on the website. Beginner, intermediate, and advanced levels of membership, and we always have someone standing by 24/7, 365. Guys, being a successful trader is just like being successful in anything. It's like opening up a combination lock. It's not enough just to know the numbers. You have to know the combination. That's what we do here at School of Trade. We don't just give you the terms you need to know. We show you how to do it in the right sequence, the right way, so you can launch a safe, profitable, and long-term career as professional traders. My name is Joseph. Thanks so much for an incredible week. Thanks so much for tuning in, and I'll see you tomorrow live in real time, tomorrow morning at 8 a.m. Eastern Time in the Trade Room. And the next newsletter is next Monday evening. You guys be well out there. Be nice to each other. I'm going to go get myself a cocktail or two here. I'll see you guys tomorrow. Adios, amigos. Bye-bye for now.